Good afternoon, everyone. Welcome to today's webinar. My name is Venugopal, and I am one of the speakers for today's session. Stephen, is the voice clear and audible? Ashika, is the voice clear?
Yeah, clear, sir.
All right, very good. So with me, I have Ashika Agarwal, who would be presenting the first part of today's session on key changes in GST that has happened recently. And more importantly, we are hitting 30th November. October returns get filed in November. What are all the things that one needs to do in the month of October? And we are in a right moment where we have filed our income tax returns. You have completed tax audits. So you know what is the turnover that has been frozen or what is the ITC that has been taken, ITC not taken. All that information is available, right? So what we will be now looking at is, with the information that is there right now with me, because I filed my income tax returns, I have conducted the tax audit or the stat audit. What are the changes that are required to be done in filing the October return? GSTR 9 is in the corner. By 31st December, we have to file that. So we would be today looking at what is that one has to do to ensure financial year 24-25 is proper and complete in all respects. That's the first part of today's session. Approximately, we will complete this session around 4:30. Then the second part of the session is on automation. So we have been taking sessions on Excel automations, Tally automation. Today we would be talking about Zoho, especially how you can use the contract management using Zoho. Couple of automations that can be built using Zoho flows. Again, for that session, along with me, we will have Delhi Babu, the other speaker who would be talking on the session. Now I'll request Ashika to take over, and wherever needed, do let me know, I'll be there. And let's start the first session of the day, GST. Feel free to ask your questions. You are here to learn, understand various things. So put your questions in the chat box. For the facility of easy flow, everyone have been muted. You can raise your virtual hand. Stephen or some the admin will unmute. You can ask the question. Else put your question in the chat. Don't worry whether it is small or big. We are here to address all your questions. With this, let's begin the session. Ashika, over to you. Ashika, your voice is not audible. Stephen, are you able to hear Ashika's voice?
Is it now audible?
Yes.
Okay. Good afternoon, everyone. Today's session focus on one of the most crucial and time-sensitive aspect of GST compliance. That is the time limit for making an adjustment for financial year 24-25. Whether it's related to availing of ITC or rectification in the return or issuing of credit note. Each of this action is governed by specific timeline under the GST. So with multiple recent changes and clarification issued, it became very important to understand the various cutoff date which is provided for 24-25 in order to avoid any dispute, reversal or lapse of ITC. So with this, let us move forward for our today discussion. I hope my screen is visible.
Yes.
Visible.
So these are the key provisions which we are going to discuss today, and to make sure if any error has happened while filing GSTR 1 or 3B for 24-25 is being rectified now. First is our ITC 16.4, which deals with time limit to avail the ITC. As we are all aware, we are standing in the month of October. So this October month return is very crucial because in all the corrections, all the error, if anything we have made in 24-25 need to be corrected by this October month GST return. If you will see on the screen, for every of the provision, cutoff date has been provided 30th November. We will be discussing the relevance of the 30th November also in our relevant slide. So over here, first thing is time limit to avail the ITC. Second, if any error done while declaring your outward supply in GSTR 1, how you can rectify the same. GSTR 3B, if any tax, short paid or excess paid, this is the time to rectify. How we will do, we will be discussing in subsequently one by one. First, I'm just giving you a snapshot of what the discussion we are going to do. Then comes TCS return. So if any of you all has a tax collected at source where GSTR 8 is applicable, in that case also rectification is 30th November. Obviously, if you are unable to correct your details by 30th November, your last option is your annual return, GSTR 9 and 9C, reconciliation statement, which need to be filed by 31st December. And as Sir said, that now all the audited are almost in the completion. Maximum would have been completed. So while doing statutory audit or tax audit, there can be a case you might have come across the error either which has been done while filing GST returns, which need to be rectified. So this session plays a very crucial role. How whatever discrepancy you notice in your books with GST return and how you can rectify the same. So we'll be moving forward one by one discussion on how the things you can rectify. So first starting with outward supply. So as you can see, law providers to do the any error or any omission I have done while filing my GSTR 1 for financial year 24-25, I can rectify till 30th November of 2025. Now, this 30th November, which we are specifying so many times, it doesn't mean that 30th November means November as the month in which you can do the rectification. It ended with October. So your October GSTR 1 and GSTR 3B is the one which plays the role, because it is the October month GST returns which you are going to file by 20th November. November GST return will be filed by 20th December or GSTR 1 by 11th December, which will go beyond November 30. So the deadline becomes October. So all the compliances, all the correction need to be reported in GSTR 1 and 3B of October month for financial year 24-25. Then only those correction will be regarded as within the deadline and you will be in compliance with GST law. Beyond any correction cannot be done beyond October month. Even GSTR 1 and 3B will not block any correction, but GSTR 1 will not take any date of 24-25 after you have filed your October month return. So any credit note missed out to report, any outward supply missed out to be need to be reported now. Otherwise, those benefit will not be available.
Ashika,
Yes, sir.
can you go to the first slide which you have shown the key provisions for discussions?
Yeah.
One more slide back. Back. So everyone, if you look at this, all 16, 4, 37, 39, everything is 30th November. And the definition of 30th November is now, Ashika has explained, it appears to be 30th November, but not 30th November in true sense. A return that needs to be filed by 30th November is not November month return, it is October month return. Because November month return gets filed in December. That is where understanding this word 30th November is very crucial. And we will be looking at each aspect of it. That is why we want to set this preamble so that it is cemented. Everyone is clear when the law uses the word 30th November, it is an action to be done by 31st October. Whether claiming of credit or reporting of a credit note, reporting of an invoice, making payment of taxes, anything you will be doing by October, and the October return is filed by 30th November. So what we are now talking in the law is filing by 30th November. It is not issuing credit note or taking reporting something in R1 in 30th November by 30th November. No, it is actions from in terms of physical actions. It is by 31st October, and those October returns are filed in November. Any questions to anyone on the statement between difference between October and November? Anyone are unclear? Anyone are unsure or unclear about it? Because whole of the discussions would walk on this subject. All right, please proceed.
So as we understood the meaning of 30th November, let us now understand how we can do the corrections. Now, if you see GSTR1, if any error I have done in GSTR1, okay, I have been given an option to correct it. But as we know, GSTR1 return, once filed, it can't be revised. However, we have an option by way of amendment, which is available to us, which we can do in next month. So if any error I have done in the month of April, I can correct in the month of May, June, any subsequent month I can correct it, but I can do for 24-25 till November 2025. So basically October 25, I should use the word based on tax period. So I can do my correction till my October GSTR1 filing. So if I did any error in one particular month, I can correct in any of the subsequent month till October 25. That is one option. Second option, which you are be aware or may be using, is GSTR1A. Now, if you see GSTR1A, it has got implemented from July 24. So it was not there for full period of 24-25. But GSTR1A, which provide also for correction in GSTR1, has certain limitation, because GSTR1A is applicable only for the period for which you have filed GSTR1. So if I have filed the month of August GSTR1, in 1A for the month of August only I can correct. I can't give any previous month data, or I can't correct any previous month data. So if the details what you have furnished in GSTR1 which belongs to any of the previous month, then it needs to be corrected by way of amendment. If GSTR1 correction you have yourself identified before filing 3B of that month, then by way of 1A, you can do those corrections. So there are two ways to correct any declaration you made or any reporting you made in GSTR1 appears to you that you have wrongly reported. Either it is underreported or over-reported, or pass on to wrong GSTN. Those all correction you can make by using amendment facility or GSTR 1A. But GSTR 1A is only limited to the tax period. So if you are filing for that tax period, then only you can correct for that tax period only. It does not take impact of any previous month correction. In the current month GSTR 1A, you can't do. So now let us understand the discussion which we did through examples. So suppose like in example 1, we are saying suppose you missed to report one of the invoice of March 25. Like as we discussed, audit has been completed. Now you came to know one transaction relating to B2B or B2C of March 25 invoice you missed to report. Now, while filing your GSTR 1 of October month, you can include it in your GSTR 1 for October 25, accordingly disclose in R1 and pay the taxes for the same. And obviously you have to do this declaration in this month only. Now, no other months left. If you don't do the correction in October 25, or if you miss to do the correction, remember if you miss in GSTR 1, by way of 1A also, you can't include this invoice of March 25. So it need to be included in GSTR 1 of October 25 only. This can't be made changes by 1A also. So if even though after discussion also, or even though after that also you missed to report in October 25, what is the option available? Even though you didn't report it, your tax liability is coming, then you have to pay through DRC 03 and show that transaction in your GSTR 9, and if 9C applicable, accordingly in 9C. And in 9C, there are reason boxes. So table 9 of 9C, which deals with tax payable versus tax paid. Over there, you can give the reason that this tax has been paid through DRC 03. Example 2, where you have reported wrong GSTN. If you have reported wrong GSTN, then in GSTR 1, by using amendment table 9A, we are considering as B2B. So if you are reported as a wrong, then you can amend by using table 9 of GSTR 1 and correct the GSTN. After October, you won't be able to amend the GSTN. So if it is wrongly reported, it will go to wrong recipient. Because based on your GSTR 1, data get auto-populated in GSTR 2B. So if you reported wrong GSTN, it will get auto-populated in wrong GSTN counterparty also. So the party who is going to receive, who was or who is actually a receiver of this invoice will not get the ITC credit as it is not auto-populated in 2B. So it will be a ITC loss for the recipient, because until and unless transaction get auto-populated in 2B, ITC is not eligible, and it's very much now make mandatory from Jan 22. Now there is no dispute between 2A versus 3B or 2B versus 3B specifically for the period 24-25, because now government has made it clear if the transaction auto-populate in 2B, then only we are eligible for ITC. Another example is a case of underreporting. Again, if you have underreported or overreported, those also you can correct in October month by using the amendment tables in GSTR 1. Whatever amendment you do, accordingly your liability will be decided. If you have overreported, then there will be an excess payment. So there will be no liability in GSTR 3B, and due to your amendment, your 3B liability based on your GSTR 1 will be automatically auto-populated with net impact. If you have underreported, obviously based on GSTR 1, again 3B will be auto-populated and you are liable to pay tax on it. Like in previous is a GSTN change. Due to GSTN change, there will be no GST liability, because over there data of invoice relating to value is correctly reported. Only the person on whom you have raised the invoice is wrongly reported. So there will be no tax liability. In case of misinvoice also, based on your R1, you are liable to pay tax, which will automatically get auto-populated in GSTR 3B, and you will discharge your liability based on what you have filed in R1, where you have included the misinvoice also. This part of the adjustment which we are doing relating to 24-25 in 25-26 will form part of your GSTR 9 reporting also. There is specifically a part 5 of GSTR 9 which deals with wherever there is a spillover transaction, where, like in this case, you have reported 24-25 transaction in 25-26. So it will be reported in table 10 of GSTR 9. So whatever tax, even though discharge in next year, you can submit that details, or you can make sure that department is well aware of the same thing by way of making sure that you made a proper disclosure in GSTR 9. Now, as we discuss that if you miss to report or you do wrong GST, obviously due to that, your recipient will also be impacted. As I discussed, GSTR 2B is a base to claim the ITC. So until and unless supplier correctly report, those data will not correctly auto-populated in GSTR 2B and resulting in loss to the recipient. So now this is the opportunity, whatever discrepancy you have noted, you can rectify. Because of your rectification, even recipient will be also benefited. If you have done wrong GSTN reporting, under reporting, over reporting, or you have missed. Now, if you report in GSTR 1 of October month, those data will get auto-populated in GSTR 2B of October month, which is again a cutoff date to avail the ITC. So based on your reporting in October month relating to 24-25, recipient will also be eligible to claim the ITC. But even now also, while filing October month, you miss to do the correction, then there will be a loss to recipient because time limit to avail the ITC will get over, and whatever taxes they have paid to you will not be eligible as ITC for them. So it's because as we are in the business line, and what we have noticed is where the recipient does not get the ITC, they don't pay the tax to the supplier. But it need to be understand under GST, it is not matter whether you have realized the money from your recipient, yes or no. Whether you realized or not, based on time of supply, if you have made the supply either of goods or service, you are liable to pay GST irrespective of the fact whether you have realized the money from your recipient. So if your recipient hold the tax component as they lost the ITC due to your non-reporting, it doesn't mean you can avoid the taxes or you will not pay the taxes. Being a supplier, being a provider of service or given of goods, you are still liable to pay tax. So to ensure that both the party doesn't suffer any loss, it's better or even if still you haven't done the proper RICO, go ahead, do the RICO reconciliation once again, make sure any lapse, if there, is taken care while filing this October month return.
Ashika, I want to add a couple of points. So, if you understand this carefully, we are talking both from the outward supply side, from the inward supply side also. That means you have an input tax credit in your books, but it is not visible in your 2A IMS 2B. And what you will do? You will now ask your supplier that please upload, right? And when they upload, when we say they're uploading in October, a return filed on November. You also need to ensure Now the definition of 30th November is changing from 30th November to 11th November. If they're filing it by 11th November, it would be visible in your current month IMS and you can take the credit. Assuming if they're filing, let's say they're filing on 12th November, that means even the definition of 30th November is of no good because it is not visible in your IMS. Anything R1 filed in 12th November, it would be visible in the 2B of the next month. If it is visible in the 2B of the next month, that means you are losing the time limit of 30th November. Hence, again, you will be losing the credit. So the definition of 30th November changes time to time. You also need to ensure that the 24-25 financial any invoices that you have to account, you should tell supplier that please upload in October return. Not just that, you need to ensure that they file the October return by 11th November. Even if they delay it by a month, it is as good you will be losing all those credits. Getting those records being filed on time is more important. There's a second scenario of losing the credit. He has filed on time, but you may made a mischief of unintentionally. Instead of accepting, you selected rejected in your IMS. The moment it is rejected, it went out of your IMS dashboard to the supplier dashboard, and hence again you will not be getting a credit of it. This is one important change that you need to be very mindful of. Yeah. Ashika, I have updated some more examples. You can pick version 1.1 and you can continue from here. Yeah. So another point you need to now know is, okay, now how do I make corrections to my outward supply? Corrections to outward supply can be done in two ways. You file your R1 return. 24-25 R1 returns have been filed, or 25-26 up until your September you filed your R1. How will I make corrections to my return which has been filed? Now that is something that you need to be aware of. Corrections to the return can be done in two ways. Method one, you correct it in GSTR 1A. Method two, you will correct it in GSTR 1 itself. So there are two methods of correcting. When will I use GSTR 1A? When will I use the corrections in GSTR 1 itself? So you file your R1 and you noticed an error in R1. When did you notice this error? Now matters. Have you noticed this error before filing of 3B or after filing of 3B? If it is before filing of 3B, then you will use a new return called GSTR1A. If you found the error after you filed your GSTR3B, then you will correct it in the same GSTR1. Now, when Ashika was saying about correcting, where do I correct? How do I correct? If I have not reported it, I will report it into my original reporting table, that is table 4. I have wrongly reported those examples which Ashika has given, short value reported wrong GSTN, etc. Then I will correct it in GSTR1, table 9A, and if it is pertaining to credit notes and debit notes, table 9C, and if it is pertaining to a B2C supplies, table 10. These are the two places where you will be making corrections. Ashika, please go ahead.
So you heard us saying we are talking about GSTR 1A and amendment. So let us understand also what is this GSTR 1A. Now, this additional facility has been provided only to correct the current tax period. As we already discussed, you can't do any previous month correction through GSTR 1A. Only the current period you can correct it. And that also you can do only before filing GSTR 3B. If you are a monthly filer, every month 20. If you are a quarterly filer, then before the quarters. So that's the facility which has been provided. And it is applicable for both monthly and quarterly filer. But though you can correct your R1 file for the current tax period, accordingly, your correct tax payable will be auto-populated in your GSTR 3B, and based on your 1A correction, all impact will be taken in 3B and you can pay the taxes. However, there is one drawback also. Though the correction made through 1A will rectify your actual tax liability payable for that tax period, and you will pay what is actually payable through 3B. But whatever correction done through 1A will not get rectified in 2B immediately of the debt month. So if we are filing for the month of October, in October through 1A, if you do any correction, those data will get auto-populated in GSTR 2B of November month, not in October. So this is one small drawback, though 1A tax liability is getting on a real-time basis update, but ITC credit is getting postponed to one another month. So that need to be keep in mind. If any correction of 24-25 is there, you have to make sure you correctly report in GSTR1. By way of 1A, if you try to correct of the data which is already furnished is 1, and now you are trying to correct with 1A, then 2B, ITC will get auto-populated to November, and again, it will be a time lapse for. So it's very important GSTR1 while filing for the October month is correctly filed. No error or no mistake is done for 24-25 so that you need to rectify through 1A. Otherwise, ITC loss will be there at the recipient side as we discussed. And here recipient GSTN in 1A recipient GSTN is not allowed to change. That you have to do through amendment. That is October month, any error can be corrected by November month. You can do the recipient GSTN through amendment table, which we just now discussed, table 9 and table 10, 9A and 9C and table 10. This I just now discussed that 1A has one drawback, that whatever the correction done through 1A will get postponed to next month. So over here, by way of example, it is explained that suppose a supplier issue two invoices, invoice 1 and invoice 2 in the month of Jan 25. He furnished the detail of first invoice, that is invoice 1 on 8 Feb 2025 in form GSTR1. He misses to furnish second invoice and furnish that detail in 1A of 15 Feb. This is to explain how the data will flow in GSTR 2B. So as this invoice is furnished on 8 Feb in GSTR 1, so this data will get auto-populated in GSTR 2B of Feb month only. But the second invoice, which is furnished through 1A on 15 Feb, that will get auto-populated for the month of your March 25, where it will auto-populate in 2B. Now, this is another example for the late reporting of GSTR 1. Again, taking example of two invoices. Now, here is one invoice 3, which is furnished on 15 Feb 25 in GSTR 1. However, invoice 4 is declared on a 16 Feb 25. Here, both the invoices are after 11 Feb. As both the invoices are after 11 Feb, therefore, it will be auto-populated in the March 25. Because over here also GSTR1 is late file and GSTR2B cutoff date is 14. So if we don't file our GSTR1 by 11, then it will not get auto-populated in GSTR2B. So filing of GSTR1 within due date plays a crucial role. Reason being, it also depends upon the ITC availability on the recipient side. we are somehow or majorly depend upon our input tax credit, because non-availability of credit or lower availability of the credit hamper our working capital. So it's very important filing of R1. Even this not just important from the recipient side, but it also impact our, that if recipient sees that we are a belated filer, non-compliance, so they also don't want to do business, because they see what type of supplier they are dealing with who doesn't fulfill the compliances. Because of their non-compliances, audit investigation may also happen at the recipient side. So it's very important that we do comply, because it's not just a GST compliances, but to carry forward our business also. Because one lapse from any supplier, because you might have seen lot of third party notices comes due to somebody lapse, else another person lapse, you have been issued notices to check whether the transaction which you happened with those parties are genuine or not. So this compliances plays a very major role. So just coming to this part, so this basically to make you understand the importance of filing within due date and what are the things you should do to make sure your 24-25 any error in relation to outward supply, if any, you can take care now.
Any questions to anyone on GST or 1A? We will now move to GST or corrections through 1. But you understood how missed out transactions can come into 1A. What cannot come into 1A is the prior period transactions, and what cannot come into 1A is the change of GST numbers. Let's move to 1 changes that needs to be made through 1.
Now here, when we are talking about changes through 1, here prior period transaction will come. So any error or any omission you have done, not only for 24-25, but also for 25-26 can be rectified. So there are different tables available. So if you have B2B related supply, you have to do through 9A. If it's related to debit note or credit note, through 9C. And if it's related to B2C unregistered supply, then through table 10. So these are the 3 tables which is relevant for you for any error you did while filing your GST R1 for 24-25 or 25-26 till date. That also you can, even 25-26 you have more time, but if any error you have noticed, that also you can rectify through amendment in GST R1. Sir, you want to add something?
No.
Now we understood about GST R1. If you will see GST R1, we have a very detailed reporting. Invoice-wise reporting is made of all the supply which we made, like B2B supply is made invoice, all in relation to supply made to register is made at a transaction level reporting. Apart from that, all other supplies like B2C, export, there we report at a summary level. Now, when we come to, so over there, it is easy to identify where the error happened. But when we come to 3B, you will notice in GSTR 3B, all is at summary level. So whatever adjustment you make at R1 is a base for your 3B. Again, like we discussed at the starting of our session, all the key provision, here also 30th November, which again mean October GSTR 3B is the one through which you have to do all the correction. Now, if you will read the law, it says 30th November or actual date of filing. As we know, actual date of filing of annual return is 31st December. Accordingly, earlier became 30th November and October become the last return to do the correction. So here also, let us also understand what are the error possible and how you can correct it. Now, you have missed out a output tax. Like we discussed at the starting, suppose you missed out to report any invoice in GSTR1. Now you can disclose in GSTR1 and accordingly you can pay the tax. The summary of taxable turnover is auto-populated in table 3.1a. Now here, while paying tax, you have to keep in mind you are also liable to pay interest. Like in our example, invoice belongs to March 25 and you are discharging your liability in October 25. So there is a delay of 6 months for which you are liable to pay interest, that also at the rate of 18%. You may give a ground that I have paid that tax with input tax credit. And as per law, when the ITC, I'm liable on net tax liability, that is what is paid through cash. In case of delay reporting or belated reporting of invoice, just because you have discharged with ITC, you can't avoid the interest. Interest will be applicable as it has been delay reported. That is also specified in the law. So you are liable to pay interest at the rate of 18%. In case, second scenario, where you have made excess payment of tax. Like in our example, we are saying by mistake, you have paid 1,20,000, though you were liable to pay only 1 lakh. Now, if you will amend your GSTR1, if any invoice of B2B or B2C has been over-reported, you can amend by way of table 910, which we discussed. By way of amendment, automatically your liability in GSTR1 taking net impact will reduce, and automatically when it auto-populate in GSTR3B, it will be taking impact of this excess tax paid. If it is a case of wrong reporting of invoice, then you can, it will show reduced liability, and then your tax liability will automatically will show less 20K and you can pay the balance tax amount. But if suppose there was everything in 3B tax was correctly discharged, in R1 some error has happened. Okay, sorry, I said vice versa. Suppose in 3B by mistake you have excess paid, but there is no error in R1. That is very rare. It will happen only when there is a wrong reporting. So if suppose 3B you have excess paid, then in such case, you can through 9C, you can show that there is an excess payment and you can claim refund of it. Another example is wrong head tax. Like you were liable to pay I, you paid as CNS. So again, you can correct that invoice in R1. You can pay the tax which you are liable to pay. Means if you are liable to pay IGST, you can pay IGST and you have to claim refund of CNS. This will go through section 77, which deals with wrong tax type head refund. So correct tax need to be paid through 3B, and for wrong paid, you have to claim the refund. Other thing which is coming is for ITC part. If you miss to claim ITC, now as we discuss, GSTR1 play a very crucial role to claim the ITC also. Now, suppose there is an invoice which is there in your books, but it is has still not come in 2B. You have to make sure you have to contact with your supplier, ask them to report. If they report and it get auto-populated in October month GSTR 2B, you can claim the ITC of it. But if it does not get auto-populated in 2B of October month, that ITC is permanently lapsed. Another example is of wrong ITC claim. Now, there are few cases which still we are seeing, though law has given very clear that 2B is a base. So you have to claim the ITC based on what is auto-populated. But what it has been noticed is, few of the SSC are still going through books and they are claiming ITC as per books. One. Second, there are person, what they are doing is they are writing ITC as per books, but claiming as per 2B. What I mean by second scenario is, suppose I have a ITC of 1,50,000 in my books, but my 2B auto-populated only 1 lakh. 50,000 is still not auto-populated. What they are doing, based on books, they are writing in 4A5 1,50,000. Then they are doing 4B2 temporary reversal 50K. And net they are availing 1 lakh only, which is what auto-populated in 2B. That is also a wrong reporting, because whole 3B ITC is linked to 2B. It doesn't matter whether the transaction is there in books or not. What is there in 2B, based on that only you have to give 4B1 and 4B2. So if there is a transaction in 2B, which is not there, you have not recorded in books due to section 16 non-compliance, then also based on 2B only you have to fill your 4A5 and you have to park in 4B2, your temporary ITC. If there is a vice versa case, transaction is there in books, not auto-populated in 2B, can't be reported in 3B. Because what will happen? Your 4A5 will get more than 2B, and definitely you are going to get the notice, though net claim is not more than 2B, but there will be a notice and unnecessary explanation which will keep on going. So if you have claim access, you can reverse through table 4B1 in GSTR 3B. Again, if you have claim access and also utilize this excess ITC to discharge your tax liability, then you would be liable to pay interest. But if you have only claimed the ITC but not used for the payment of output tax, you won't be liable to pay interest on the same. You just need to do the reversal of table 4B1. 4B1 is your permanent reversal. 4B2 is temporary reversal. Make sure you do with 4B1, or through DRC03 also you can do separately, because you can't park it to 4B2. 4B2 is not regarded as a reversal because it is getting auto-populated in ECRS, which means you may claim in future. So if there is a case of ineligible availment or excess claim, do through table 4B1. Then another issue, it may be of RCM not reported. So there may be a case like most of the clients, SSEs are missing to do tax on rent, because now commercial property tax is also has come under RCM. Residential was already came. Now commercial also came. So it has been seen people are missing for commercial properties. So if you have a rent from unregistered person, then make sure you pay tax under RCM. And if there is any place where you have missed out to pay the tax under RCM, now you can disclose in your GSTR 3B. Specific table is table 3.1D, where you can report the tax and claim the ITC. Now, here also it is important to understand, for ITC, there is a time limit. Even for RCM ITC, there is a time limit. It doesn't go infinite. Don't think that just because you are paying the tax now, you will become eligible. Means whenever you pay the tax, you will become eligible. Don't deem that. So if for 24-25, any liability of RCM is pending, make sure you pay in the month of October 3B and claim the ITC. Now, RCM liability is always advisable to pay through GSTR 3B, because there will be correlation between table 3.1D, which says about liability on RCM, and table 4A3, which talks about ITC on RCM. So if there is a mismatch between what is paid under RCM and what is ITC avail under RCM, then notice come. So that's why, even though it's belong to 24-25, if you pay through 3B, there will be no mismatch. So it's always advisable to pay the RCM with 3B, so that ITC and RCM payable go hand in hand. Now, the last scenario is ITC reversal. So rule 42-43, if anybody has exempt supply, they have to do proportionate ITC reversal of the common input service or inputs or capital goods. So you have to see if you are into taxable and exempt supply both. If any ITC which is commonly used for both, like audit, security, rent, office related expenses. If commonly used, then it need to be reversed proportionately to the turnover of exempt. To the extent of exempt turnover, you have to reverse the ITC. That also you have to do in table 4B1, because 4B1, as we are saying time and again, I am saying it's a permanent reversal. So you have to do in table 4B1. And whatever spillover transaction, as we are discussing, which is going from 24-25 to 25-26, you make sure you duly report in part 5 of GSTR 9, because it will serve as a link to show that what are the correction for 24-25 you have done in 25-26. Now, we were discussing about the correction, but how you will come to know what correction need to be done. So these are the key checkpoints which has been given, that you make sure you do it before you file your October month. So you should do your reconciliation with GSTR 1 versus books, 3B versus R1, to identify any outward tax liability which might have been missed out or over-reported or under-reported. Then comes your ITC. Check whether you have availed the ITC based on 2B or not. If there is excess reported, you have to reverse. It is under-reported. This is the only month where you can reclaim this ITC. You can avail the ITC. Otherwise, it will get lapse. Second, if there are any transaction in books for which still your data has not auto-populated in 2B, connect with your supplier, ask them to furnish those details. It may be a case he might have furnished as B2C, or he has missed to report, or he has furnished with wrong GSTN. Go connect with them, make sure they report it so that you can avail the ITC of it. Credit note and debit note, that is also that we will be discussing in our subsequent slide. Any tax rate error, any GSTN error, and obviously if any liability has come, make sure you pay with interest. So you want to take it forward? Sir? Now coming to the part of GSTR 9. As you would be hearing me, I was talking about part 5 of GSTR 9. So if there is a case of spillover, it is reported in part 5 of GSTR 9. But if it is a case where you have made the payment through DRC 03, then it will belongs to that year itself, 24-25. So this is just basically to explain how the things will be reported in your R9 or what you should do. Now over here, suppose for 24-25, your GSTR 3B rectification you have done before 30th November, like we are discussing here. So if you have corrected your 24-25 any error by 30th November or by filing October month return, then you have to disclose in part 5. Table 10 is where there is an increase in outward tax liability. So if you have paid more, means you have discharged your tax liability in 25-26, then you have to report in table 10. If there is a reduction, means you missed out to report credit note, which you have reported in 25-26, then table 11. Similarly for ITC, like we discussed about ITC correction. So if there is any ITC which belongs to 24-25, you have claim in 25-26, need to be reported in table 30. If any 24-25, any ITC you access claim, ineligible you claim, which you have corrected in 25-26, then it need to be reported in table 12. So there are separate tables which deals with outward increase and decrease. So outward increase is dealt by table 10, outward decrease by table 12. Similarly, table 11. Similarly for ITC, if you are availing ITC, then table 13. If you are reversing ITC, then table 12. Now suppose in your GSTR 3B, you paid tax more than what is payable, then you can claim refund. It is always advisable not to do adjustment. What happened if we do wrong payment or we pay excess? So what we try in the next year, we pay short. Due to that, 1 versus 3B difference come. And as it is a spillover, you people would have seen multiple audits department does, and they don't want to go to next year to verify what I am saying, excess payment or short payment. So if it is a case where you have excess paid of what is payable for 24-25, then claim refund instead of adjusting with subsequent year. Because that subsequent year when audit will pick, they will find short payment. And when you will try that it is a previous period excess payment, department officer don't understand, because they are like, why I will do another year audit for you. Then another thing is, it may be a case instead of doing through 3B, you have paid through DRC 03. If you have paid through DRC 03, then in GSTR 9, it form part of table 4 because it's not a spillover. In DRC 03, you will select that period is 24-25. So it will become that year liability itself, and it will be reported in table 4. Similarly, if you have selected while filing GSTR 9 to pay, in GSTR 9 while filing, there is an addition liability column. You can pay through 9 directly also. Then also it will form part of table 4. Table 4 basically of GSTR 9 we are talking, which deals with the tax liability. Wherever we are liable to pay tax, we disclose in table 4. Now, this is a case where you have excess paid the tax and how it should be reported and adjusted. Now for 24-25, like in this, it is says, suppose you are liable to pay 100, you paid 120. One option is, I can adjust in my 3B of this month. 24-25 I paid excess, so 25-26 in October month while filing, I am paying less than what is required to be paid because of previous year adjustment. Then, as I told you, table 11 will come. When there is a decrease in outward liability, then table 11, increase table 10, GSTR 9. Now, if we have adjusted in 3B after 30th November, it's a case of excess payment. Okay. It's not a case of short paid and all for all those corrections. So if I have excess paid, then, sorry. So if I have excess paid, then also I can adjust after 30th November because excess payment has no time limit to adjust under GST. Though there is a provision to do the correction and all, but there is no provision what will happen when there is a excess payment of tax. Excess payment of tax, you have a two option. Either I can adjust with my subsequent tax liability or I can claim refund. Whenever there is a spillover, when 2 years is coming, it's always advisable to go for refund. But obviously refund, you have to see the quantum involved, whether to go for refund or adjust. Based on that, you have to take the action. These are the various functionality which is provided on a GST portal. This we have just written is government has tried it his best to make sure that correction, the error and omission are less. If you see by way of IMS introduction, error or omission should have reduced. Reason being, your counterparty or you yourself is accepting and rejecting or keeping pending. So thereby ensuring that your supplier file your return properly. So the purpose of just bringing this slide is to show it to you the multiple option of correction which has been provided and to show that chances of doing error has been to maximum extent has been reduced by government. But still, if there is anything missed out, you can correct now. Now, this is credit note. Now, this is important to understand because what we have noticed, people raise credit note like right and left without thinking what the credit note actually stand for. Now, we have seen the cases where just because your recipient said, I will not accept this invoice, you raised a new invoice, or there is a negotiation, or e-way bill got expired. There are multiple reasons for where people raise credit notes. But under GST law, credit note is very specific. Just because you didn't realize any amount from your counterparty, you can't raise credit note. You have to be fit in the definition which is provided under GST in order to claim the benefit. If just because of bad debt, e-way bill expire, that's why you did credit note and reissue the new invoice, or just because your supplier didn't, your recipient didn't accepted the invoice 2 months, 3 months back, so you did credit note and again raise the invoice. Those cannot be a reason for generating credit note. So you have to see your credit note is due to the following reason: that where you have issued the invoice and taxable value or tax charge exceed what is payable, or where the goods supply are returned by the recipient, or where the goods service both supply are found to be deficient. So in this circumstance only you can raise the credit note. Any other reason you have raised credit note and shown in GSTR1 would not be entertained by the department. So you need to be careful whether you want to do credit note or you want to amend the invoices to truly reflect what it should be. Because e-invoicing is also there. So people feel that if I have raised invoice, now how I should make the changes. Even though e-invoice is raised in GSTR1, those e-invoice which is auto-populated, you can still amend it. So you have to decide when it will be a credit note and when you require to amend the invoice, which we have find multiple people lack that knowledge. Because of that, department deny credit note benefit, even though there are genuine cases, okay, that this practical difficulty arise due to which they raise the credit note. But that practical difficulty is not taken into consideration. Only when it fall under this circumstance, you are required to raise credit note.
One point on credit note, Ashika, for again, many people get confused with this credit note business. Credit note and debit note originates only from the supplier perspective and not the recipient perspective. From the financial accounting terminology, credit note means you're crediting someone, it is credit note, you're debiting someone, is debit note. But from the GST perspective, you raised an invoice, you paid taxes to the government, you want to reduce the tax liability, you will issue a credit note. Tax invoice or debit note is increasing the liability, credit note is reducing the liability. Because there is a reduction in the liability, the taxes which have already been paid is being asked back from the government or adjusted in the subsequent payments. So there is more emphasis from the audit of the department on the credit notes. And the conditions to claim the credit notes are also very important. One, which is the points which Ashika said about on taxable value, or whether it is a return of the goods or deficiency in the service. These are the conditions. But the declaration of credit note is also more important, because we have 15 subsection 3, which is talking about the reduction in the liability, where supplier is reducing the value and there is a credit note which is coming in. The government wants to have more emphasis, and the procedure for reporting credit note is also 30th November. So let's look at the circulars which have been recently, which has come, and circular that has been rescinded in this. Again, pay attention and listen to this portion of the discussion. Please continue.
Now here one more thing. As we were discussing about the dates, again credit note also come with a time limit. So you have to make sure if credit note is there which relate to financial year 24-25, you have issued that credit note by on or before 31st October, and you should have disclosed that detail in your GSTR1 of October month. If you don't issue credit note on or before 31st October or don't declare in GSTR1 of October month, then the tax benefit on this credit note for 24-25 will not be eligible. So you need to be careful, check if any of your supplier, if anything, any of your case where credit note is to be raised, is been raised now and reported properly. And one more thing, as of now, earlier credit note was specifically linked to the invoices. Now there is no linking with the invoices. So in GSTR 1, even though 24-25 credit note relating to in GSTR 1, though credit note relates for the invoice of 24-25, if you disclose even after October in GSTR 1, it will take. But remember, when the officers are very diligent, that credit note part, they are checking very thoroughly. So if they find out for 24-25, you have taken after the time limit, they will disallow the benefit, though GST portal has removed that check. And one more thing which we want to bring into your point is, if you were aware, for credit note, officers were asking to give declaration to the fact that your recipient has reversed the ITC. So there was a specific circular they have brought in. Earlier, there was no such mechanism to check whether the recipient has reversed the ITC or not. But one of the condition to take the benefit of credit note which they provided is to make sure that incident of tax and interest has not been passed on. So basically, the thing over here is nobody should be benefit it at the cost of another person. Unjust enrichment is what the concept they were bringing in. But even though when the people were filing in GSTR1, properly declaring the credit note in GSTR1, even after such declaration, benefit was disallowed due to non-production of the fact that recipient has reversed the ITC. And accordingly, they bring in a circular where they said, you get a certificate from a CA or get a certificate from your recipient below 5 lakh, above 5 lakh was the condition they given, monetary value. Get that they have reversed the ITC, irrespective of the fact that now they have done all the credit availability based on 2B. So if I have declared a credit note in GSTR1, in 2B, it will be net reflected only. So my recipient can't claim. Even if recipient has claimed the ITC, he will get the notice based on 2B versus 3B difference. So it's not the case that only the supplier is getting penalized. Even the recipient is, if recipient says that that my supplier has not claimed deduction of output tax liability, then also they will not be allowed the ITC. So basically the supplier are taking this, taking this are taking this point only, that as it is auto-populated in 2B, recipient has automatically would have reversed the ITC. But now from 1st October 25, they have made the changes. Now they have even removed the circular which allow required for declaration or certificates. Now they are saying that you have to make sure that input tax credit. Now they have break into 2 points. For that 2 points, for my ease of reference, I am referring as B2B, B2C. So if it is a B2B transaction, obviously what I furnish the detail will get auto-populated in GSTR 2B. And accordingly, as you have seen, IMS is in place. So my recipient is accepting, rejecting, and pending. So if my credit note detail, if I have furnished, it will auto-populate in 2B. And now IMS has, from October, this month only, they have given the facility of a credit note also to keep pending. So here, by way of accepting, rejecting, and pending, my recipient is itself is accepting the fact that they are reversing the ITC. So that's why now that circular is not relevant, but this is applicable from October 25. For 24-25, still there will be a dispute to get the certificates. But when it comes to B2C, now B2C is what I am declaring at a summary level. Now over here, I have to make sure that incident of tax is not passed on. So it should not be a case that I have collected the tax, then also raising a credit note to reduce my outward tax liability. So here I just need to prove them that I have not passed on the tax benefit, or my recipient has not bear the cost of tax. If I prove that, then in B2C, I can get that benefit. So B2C incident of tax not pass on, I need to show them. Now, coming to the part of understanding of time limit. We discuss about R1, 3B credit note. We came to know all due dates are on 30th November, which is basically October month filing of the return. So October of filing of date of annual return it is, but October is your GST, October is your final month to do all the correction. So you have to check if any liability is coming. If there is an extra liability coming, it's better to pay through DRC03. If you have short paid, then you file the refund first. If you have excess paid, then you file the refund. Either you can pay through 3B or you can pay through DRC03. Now, these are the circulars on discount. As we were discussing about the credit note, it is linked to it. This relates to your financial credit note. Now, there can be a cases where either you can't issue the credit note within the time limit, or there can be a cases that it does not relate to credit note circumstance, which we discuss. It is other special discount or something you have given. So if it is in the nature of financial credit note, that the things which were happening is department was not allowing you to reduce the tax liability because financial credit note does not fall under the ambit of GST. Now they have clarified that. Now, financial credit note was happening two impact. First impact is supplier was not able to reduce their outward tax liability. Second impact was recipient was being asked to reverse the ITC to the extent of commercial credit note because they were saying that it relates to payment not made to supplier, so resulting in denial of ITC. Now they have clarified based on financial credit note, input tax credit is not required to be reversed by the recipient because it will not be regarded as payment not made to be supplier because it's a commercial understanding between supplier and recipient. So over there, they have clarified not to reverse the ITC. Sir, you want to add something?
Yeah, the point I would like to add is fundamentally the credit note per se. Only when you are fulfilling section 34, the document issued will be credit note. Now, any other document that you are issuing as a credit note, which is an accounting credit note, we are calling it as financial or commercial credit notes. Now, these credit notes are in no way connected to GST. Because it is not connected to the GST, the reduction in the tax liability is not permitted by the supplier. Because the supplier is not reducing the tax liability, earlier the recipient was saying that, okay, I don't need to reverse, but circular 92 was against. The latest circular said that's okay. Now, even though the credit note is not reversed by the supplier, the circular 251 said recipient also need not reduce the input tax credit. This is an important aspect. Now, to whom it would be helpful? I am crossing this 30th November. Now, after 30th November, can I not issue a credit note? Yes, GST credit note you cannot issue, but financial credit note you can issue. There is a benefit of the tax that can be a commercial understanding that you can discuss with your customers. Then there is another point here on the post-sale discount. Will it be treated as a consideration? Now, a discount which has been issued after the supply has been made, and like general rule is when there is no agreement, then that cannot be treated as a discount. The classic scenario is last month new iPhone has come, and let's say the price of that new iPhone is 1.5 lakh. I think what model 17 or what iPhone 17 has come, correct? The dealer necessarily not having the stock of only 17. He has iPhone 14, 15, 16 also. Till 17 was launched, the price of 16 might be 1.5 lakh. Now let's say the price is reduced by 10,000 rupees. Now iPhone 16 is at 1,40,000. iPhone 17 is let's say 1,50,000. Why would customer choose iPhone 16? They will still say it's only 10,000. I'll pick the latest model. Now the supplier should reduce the price to let's say 1 lakh to make it attractive. Now, if the dealer distributor, he would have, the shop owner has purchased himself at let's say 1,10,000. Why will he reduce? Now there would be an understanding between the manufacturer and the shop owner saying that it's okay, you reduce the price, I will compensate. So you sell to the customers at 1 lakh. Now, if this shop owner returns all the stock to the manufacturer, what will manufacturer do? Even he cannot do anything, right? So he says, better I will compensate you by 10,000, 20,000. You reduce the price of iPhone 16 from 1,50,000 to 1 lakh, so that the existing stock gets more. Now that is the price arbitrage where customers can think, okay, it is 1,50,000 and this is 1 lakh. Then he may think that, okay, it's okay, I'm okay with iPhone 16. Now the question the department has now is, the customer has paid 1 lakh to the shop owner. Manufacturer has paid the 20,000 rupees to the shop owner. What is the GST for to be charged? Now you may say, from the customer I collected only 1 lakh, so GST should be on 1 lakh. But on the other hand, from the tax perspective or income or my P&L as a shop owner, I have 1 lakh receipt from the customer, 20,000 receipt from the manufacturer. My total income is 1,20,000. So a GST officer is coming and assessing me. Why should I not be questioned for 1,20,000? This is the thing that came up. Now, in a plain understanding, yes, 1,20,000 is the income. Let the GST be on 1,20,000. Now, this 20,000 which I got it from the manufacturer can also be thought as, can it not be treated as my purchase cost reduction? Instead of showing under sales, I will reduce from my purchase. Then my sales was 1 lakh, I paid GST. Now, this is slightly extending the earlier discussion of the financial credit note. So the government said, by way of the circular, they said, okay, now if this being the case, the circular 251 said, no worries, do not treat this as consideration. So, but general understanding is, post sale is a consideration. Do not treat this as a consideration. But while saying this, they gave one exception. They have said that if there is already an agreement, generally like Infosys, Wipro, they say for the employees, okay, Dell is giving an offer. If you are an Infosys employee, you will get the Dell laptop instead of 1 lakh rupees, you will get 75,000 rupees. Now, between Infosys and Dell, they would have undertaking some, at a manufacturer level, they have undertaken saying that, okay, on the instruction you issue it, I will pay it. So when the exceptions are, when it is known that the consideration is paid by someone, the consideration is indirectly paid by someone, then that should be added to the value of supply. This is coming from where? In section 15, subsection 2. The price which is received by someone, a third party is making the payment, that should also be added to the value of supply. So that is where this is getting added as a value of supply, right? Then they have given, sorry. Then they have given one other point as promotional activity. Most of the showrooms will continue the example of this iPhone. Most of the showrooms has, let's say, Sony, Oppo, iPhone. Now there would be a push that would be given from the manufacturer saying that, okay, if you achieve this month, I'll give you additional discount. So they will put up some hoardings, everything, right? Now, when activities of these things are happening, they have also said it should not be treated as a cross charge. There is a supply, the marketing activity done by the showroom to them. So they have said that this shall not be treated as a consideration. They have given exception again. If the manufacturer says that I will specifically give you X amount. In fact, most showrooms you will see there would be company owned employees standing there and doing promotion, or my person's salary is being borne. So they said only when there is a financial transactions included, it would fall as an exception. Again, it would be treated as a consideration and GST would be applicable. The next point which has come up is what would be the documentation for this? If there is a consideration, okay, before the documentation, let's see the examples. First is on the post-sale discount, which is a price revision. Let's say the March invoice was 10 lakh rupees. In September, supplier has now agreed to give 1 lakh rupee by way of credit note. Now this is happening in September and it is saying by GST credit note, they have agreed. So it would be well within the section 34. Now, the issue date of the credit note is 30th September. Technically, it can be 30th October also. So, one is the date. Now, having issued, it should be reported it in the October return, which is filed by 11 November. So, by then, if you issue, the supplier can reduce the liability. Even though I have issued on 30th September, if I am reporting in November, so there are two things to be checked for credit notes. One, issue. Second, on reporting. Both needs to be taken care. One on issue and reporting, both needs to be taken care. Only then the discount will be applicable. By the way, just looking at the questions, Latashri was asking the difference between financial credit note and GST credit note. Now, I think you would have understood. If you still have a question, please put the question. Then if the sales return is happening after the year end, I'll continue the example for the goods supplied in February, returned in July. Even this, the credit note is permitted because it is well within the due date to return the goods and report. So the document date should be on or before 31st October. But if the return is happening after 30th November, credit note can be issued, but it would be a commercial credit note. GST cannot be reversed. Like Ashika has mentioned, the date of the credit note itself will be 30th November. So no, I will be reporting later. So this could be a permitted thing. The answer is no. Department would trace that these are the goods returned for a supply made in the financial year 24-25 and the return has happened after 30th November. Hence, you cannot issue a GST credit note. It becomes a commercial credit note. Then ITC is not reversed by the recipient. This is an interesting example I have brought it. The supplier has issued a credit note, so he has reduced his liability. Supplier has issued, he has reduced his liability. Recipient has not reversed the ITC. Now you may say, how did recipient not reverse the ITC? IMS is there, 2B is there, but they are not. IMS is not mandatory. You can choose just be blindfolded to IMS. Anything coming in 3B or 4FI, you can still amend, change values. Supplier has done anything, whatever. Now, what is the result is the new amendment that has come from 1st October. It's saying supplier cannot reduce output tax unless recipient has reversed the ITC. How will supplier ensure the reversal? Is it an email statement, a ledger confirmation, or mere reporting in GSTR1? Is it sufficient? Well, this is a question. Originally, the expectation from the department is whatever the post supply discounts, and they have excluded the discounts which are pre-agreed and specific invoices. They have excluded that. Other than that, the post supply discounts which are given by way of credit note, There is a mechanism which has been brought in saying that the supplier can reduce only when the recipient has to reduce. What is the proof that the recipient has reduced? So they said, okay, I am giving a temporary mechanism. What is the temporary mechanism? Go to the supplier, ask supplier to give a CA certificate saying, sorry, go to the recipient. Now I'll go to all my customers and ask them issue a CA certificate saying that for these credit notes, I have reversed the ITC. I have not availed the ITC. And if the amount is small, when the definition of small is 5 lakh rupees, then it should be a self-certificate, an affidavit undertaking that I have not reversed. Now, do they have a legal power to do it? The question came up. Then the government again said, okay, they have issued a circular 212. So they have issued the latest circular saying that circular 212 is withdrawn. So the circular 253 has been given saying that this circular is now withdrawn. This circular is no longer applicable. That has been made. So this is on credit notes. Any questions to anyone? Kishan has asked if customer is rejecting one of the invoice in IMS, how will it reflect to me and how will it impact? Okay. Now I'll briefly explain the IMS for the benefit. Normal scenario reported in R1 goes to 2B and then 3B. But now we have introduced a new leg called IMS. R1 data goes to IMS. If I accept, then goes to 2B for further 3B. If I reject, it doesn't go to 2B, it goes back to R1. Why did I reject? Rejections could be two reasons. You are the supplier, I am the recipient. You raised an invoice for 1 lakh rupees, but while reporting in your R1, you have shown as 10,000 rupees by mistake. Mistakes can always happen. Now, my credit from 18,000 came down to shrink to 1,800. So I have rejected it. It goes back to you. Since you filed your R1, in your 1A, you will amend, you will make it to 1 lakh, restore it to 18,000, send it back to me. I will accept it, I will get a credit of it. What happens? I rejected by mistake. I have rejected it. Why did I reject? Like mistakes happens, right? Once I reject, it goes back to you as a supplier. Now, how will you amend? Why will you amend? What is there to amend? You will again amend that record. So I, as a recipient, I should request you saying that I made an error. Please amend. The moment you amend, the record gets opened. You don't need to change anything. Just because I'm saying amend, you have to change. The GST has provided a facility, amendment. You can just open the record, submit it again. The moment you submit again, it comes to my IMS dashboard. I will now accept. It goes to my 2B. What if I rejected second time? Nothing can be done. So 2 times rejection, same record cannot be amended more than once. This is on credit notes, outward supply. Any questions to anyone? We are already close to 4:30. We only have input tax credit and few amendments to discuss. Ashika, you can proceed. Ashika, again, you are on mute. Your voice is... No, not audible.
We discussed about outward tax liability. Now we shall move ahead with the discussion of ITC. Now, as I already discussed and said, from Jan 22, it is mandatory to follow GSTR 22. And as we are every time saying data from GSTR 1 flow to 2B, and based on that, we take our action in IMS through IMS, accept, reject, and pending. Based on that is what the data get auto-populated for the purpose of ITC. So over here, the first thing which we want to bring is that 2B is a base to claim the ITC. And as we discussed in our earlier part, that it is important that supplier report in R1, then only it will flow in 2B. And to avail the ITC, October again is the last month to claim ITC for 24-25. So this is about the time limit, which we have already discussed. Now, with this, we will discuss few relevant provisions which are important, which you have to check if any lapse is there from your side. You may make sure you do the compliances. So first of which is payment to supplier. One of the condition to avail the ITC is that I should have made payment to my vendor. And they also come with a deadline that I should have made the payment to my vendor within 180 days from the date of issue of invoice. What happened if I don't do the payment? The law is saying if I don't do the payment within 180 days, then I am required to reverse the ITC to the extent of payment not made. Now, it is important to understand over here, I'm required to reverse only to the extent of payment not made. So it can be a case, I have suppose one invoice of 1,18,000 ITC. I have not made payment to my supplier within 180 days. So I will reverse whole 18,000 ITC. But what would out of 1 lakh, I have paid 40%, means 40,000 to my supplier. Then to the extent of 40,000, I am eligible. Only to the extent of 60, that is basically 60% of 18,000, only I am required to reverse. So only to the extent of non-payment only, we have to reverse it. So you have to check any of your creditor, if there, whose payment you have not made. So you can go through creditor aging report and check which are going beyond 180 days. But it also says when I make payment to my vendor, I am eligible to reclaim the ITC. So if you see, it's only the thing is that for few period or time period, I am not eligible. And if you people have been subjected for audit, you will be finding this is the most common question is been raised by any audit officer. So you just need to check if any of the circumstances there, you have to reverse the ITC along with interest you have to pay. And once you make the payment to your supplier, you can reclaim the ITC. Now, another question which comes in mind is, what would happen to my reclaimable ITC if it is beyond the time limit? As we are discussing, our time limit is October month. So it can be a case now you are reversing the ITC. Will it cross for 24-25 if I reverse now because I have not made the payment? I have made the payment in the month of December. So December is beyond your October month filing GST return. So will the time due to time limit, will that credit will get lapsed? Answer is no. Time limit to avail the ITC is applicable only on first availment. It is does not apply when you do re-availment or you reclaim the ITC. That is applicable to all the ITC you are parking in 4B2. 4B2 ITC, which is a temporary reversal, and when you reclaim, then time limit does not apply. Only when you do 4A5 first time, then only a time limit of 16.4 kicks in. So on the time of re-availment, even if beyond November, you are duly eligible to claim the ITC of it. Then second is payment of tax to the government. One of the another condition that your supplier must have paid tax to the government. Now, how you can check? If you see GSTR 2B, there is no column to see whether your supplier has filed the GSTR 3B or not. But GSTR 2A, if you download GSTR 2B, sorry, 2A, there is a separate column called GSTR 3B filing status. From there, you can check which are of your supplier are non-filer. Any of your supplier which is non-filer, you have to reverse the ITC of it. Now, this rule comes with a cutoff date. Now, previous one which I did discuss for payment to vendor, it is 180 days from date of invoice. But over here, payment of tax by supplier to the government, cutoff come up with a cutoff date of again November. So here you have to see that your supplier by 30th September, your cutoff date, as a recipient, your cutoff date is October month, but for supplier, cutoff date is September month. So you have to check if your supplier has filed the 3B before 30th September, then it's okay. You are not required to reverse the ITC. But if supplier has not filed their belated 3B or any of the month 3B till 30th September, then in October month, you are required to reverse the ITC. Again, reversal of ITC will be with interest. And similarly, like the payment to vendor, here also you are eligible to reclaim the ITC when your supplier filed the 3B. So here also time limit under 16.4 will not be applicable when you reclaim the ITC. However, due to non-filing of the supplier, interest will come into the picture, which will be the extra cost for you. This we talk about the reporting, because if they have filed GSTR 3B even before 30th September, then obviously you will discuss it 4A5. But if your supplier has not filed your 3B in the October month, you will reverse and park it in 4B2. And when the supplier filed, like in the December month, when they filed, you will re-avail the ITC by way of 4A5 and 4D1. This is another one which deals with ITC on restoration of registration. In the past, we have seen multiple times officer has just suspended or cancelled the registration right and left. There are cases where they are non-filer. There are cases where they feel that there is a fraud done. So they have cancelled the registration, where the SSC went to court or did the filing and got the registration restored. But whole this process of restoration takes some time. Now the question which arises, what would happen to input tax credit of the transaction happening those period? Because business does not get stopped just because GST registration got cancelled or suspended. It will be keep going. But as the data will not be flowing in 2B due to suspension or cancellation of registration, the question which arises, the time limit might get lapsed to avail this ITC. So for this purpose, they have provided a relaxation. So wherever we'll try to understand this provision by way of example. So if you will see, suppose your cancellation happened on December 22, revocation happened on July 23. As per 16.4, means main time limit provision, I have to avail the ITC for 22-23 by 30th November 23. If I take 24-25, I have to avail the ITC by 30th November 2025 will be my due date to avail the ITC. So as per 16.6, which is talks about the ITC in case of restoration, it says 30th November 2023 or 2025. If we take example for 24-25 will be my due date. However, in the second scenario, now if you see this thing happened before the due date of 16.4, that's why my due date became 16.4 itself. But in case the restoration happened after 16.4 due date, then I have to make sure I file my 3B within 30 days of date of restoration of registration. If I file within 30 days, then I am even eligible for ITC, which is falling beyond the time limit. The only thing I have to take care, all my 3B I'll file within 30 days. Now this is input service distributor, and this we have put in to bring into your notice that from 1st April 25, you have to mandatory follow the ISD provision. Earlier through circular, government has given a relaxation. Even if people were not following ISD, they said it's okay, it's not mandatory. But from April 25, you have to fulfill. So if you are a multi-GSTN person who at one pen you have a multi-GSTN registration, then make sure you do the ISD compliances. When the ISD compliances will kick in? When there is a common input service are coming, which belongs to all the multi-GSTN, like audit fee, security fee, rent, software related expenses. So there are various expenses which are not at one GSTN, but it relate to pen level. the expenses which relate to pen level and those transactions where tax has suffered, those ITC, the person on whom bill has been raised, basically on corporate office and HO procure the services. So they will be doing ISD, they will be distributing this credit by way of ISD mechanism to respective GSTN, either based on GST turnover, or if that belongs to specifically to another GSTN, then to that GSTN to which it belongs. So this is about ISD. With ISD, you also need to know about the cross charge. So if you see in a pen level, there are two types of services are there. One is internally generated service. One is which is billed by third party to one GSTN, which belongs to pen level expense, like we discussed about audit fee and all. So when third party provides service, which belongs to all the GSTN, then the ISD comes into picture. But there are few internally generated service or supply which is made by one GSTN to another GSTN. Classic example is branch transfer, stock transfer, or support service provided by, like in many of the software industry, there has been cases where they have in different state multiple places where they have made sales office, and those sales office are only their support service. All the revenue is being generated from one GST. So those support which they are providing by other branches, they bill it to the branch from whom revenue is generated. So that is what a cross charge concept is. So you need to take care if you have a multi GST, make sure ISD or cross charge as applicable to you is been taken care. Now we will move on to few amendment to Act which has been made applicable from 1st October 25. One of which is voucher. Now voucher, there has been a lot of question on it, that what about how to deal with the voucher taxability and when tax need to be paid. Though there was a specific provision under law that on voucher when tax is to be paid, but the thing where key voucher was like an instrument of money only. So it was said that when there are cases where even voucher can't be redeemed, but then also tax was paid in advance based on time of supply. Now it has been clarified that on voucher, we are not liable to pay GST on it because it is in the nature of money. So whenever the main supply will be made against which voucher has been redeemed, then only GST will be applicable on the same. Another, this is important, plant and machinery. Now, we were aware of block credit 17.5C and 17.5D, which deals with the blocking of construction service and works contract service ITC. Now, there was a thing that works contract service provide plant and machinery. Construction service was providing plant or machinery. What is defined under GST was plant and machinery. Safari retreat, where the Supreme Court has given the decision that as the word in construction service use plant or machinery, they said even the what is disallowed when the construction is made on his own account. But where the construction is done for further supply. What does further supply? Like where it is a storage house, where shopping mall is being constructed. So on those cases, this supply were to generate further revenue on which GST was applicable. So Supreme Court held that based on case to case basis on functionality, it will be decided whether a building will be disqualified from the ITC or not by analyzing the definition of plant or machinery, because plant and machinery is defined or machinery is not defined. Now, government has made it very clear. They amended. Their purpose is to disallow the ITC. That's why they amended it to plant and machinery. But it is not a straight jacket decision which can be given that you are not eligible for ITC. On case to case basis, it need to be seen whether ITC will be available or not, or will cover under block credit. This is warehouse goods where when the warehousing is happening within the custom area, until and unless it is clear for domestic area, they said no, it will be considered as no supply. This is appeal related changes. Here earlier, we are required to pay pre-deposit of tax. So wherever tax is there, then only the pre-deposit comes in. But what would be the situation where only penalty is levied, no tax is there? So there was no pre-deposit. Now they have said in cases where only penalty is imposed, then also pre-deposit will come. That will be 10% of the penalty in case of first appeal and 20%, 10 plus 10 in case of second appeal. That has been implemented. So if any of you have a case where there is no tax but penalty only, then you are liable to make this pre-deposit in order to file the appeal. These are all form related changes. You can go through it. This is also for goods. You have to see unique identification mark has been implemented. If you are into goods, make sure you do the compliances. Otherwise, there are penalty consequences. Provisional refund in recent GST Council only, they said that they are going to extend it for inverted duty structure also, provisional refund. Earlier, it was only for export. Now they have expanded to inverted duty structure also. As this change required in law, so now it has been implemented by way of circular. They have given instruction to cover IDS also. And for few of the cases, they specify that in these cases will not be allowed provisional refund. These are the few clarification they have given over here, that if we just, because now we live in a world where e-commerce plays a major role. So many people have just for storing goods, they have taken place in other states. They have specified you have to take separate registration. Second, as appeal has been, tribunal is going to set up, filing of appeal has started. They have given a stagger manner to file the appeal so that GST portal, appeal portal does not face that bulkness. So this is the stagger manner they have provided to file the appeal. Then another is dean clarification. So if you will see, whenever notice or order is issued in the GST already and reference number is already there. So now they are saying dean is not required where reference number is there. Wherever reference number is not there, then dean need to be issued. With this, we came to the end of our discussion. If anybody has any question and question, they can ask.
Thank you, Ashika. And members, this is our WhatsApp channel. Feel free to get in touch with us. You can subscribe to our WhatsApp, and we will always share about the this. This is exclusively for the GST updates. You can be part of this channel, and this presentation would be shared. Now we will move to the second part of the session, but if you have any questions, feel free to put it in the chat box. We will now look at the technology part of it. And today's topic is on Zoho. And we are moving to an era that everyone are actually looking at data being anywhere, and data has to be interconnected. How can we build our own business applications using Zoho? This is what we will be looking at. And Zoho has a new product called Zoho Contracts. There are a lot of documents. You would have signed up a contract with the vendor, with the supplier. Some has 1 year time, some is some specific contracts. How do I remember that? How do I renew it? All those things. So I invite Delhi Babu to start the deliberation on these 2 points. Babu, over to you.
Thank you, sir.
Yeah. All right, let me just, yes, you can share the screen.
Yes. A part of today's second session of tech updates, as Venusaru mentioned, we are taking Zoho application. From Zoho application, we are trying to show two important applications to automate your business. Number one, Zoho Creator. Number two, Zoho Contracts. Yeah, here number one, Zoho Creator. Using Zoho Creator, you can build your own application for your various processes, or if you have different nature of business, you can create different applications for different businesses, and you can automate that. You can integrate with third-party applications or in-house applications. Zoho has 50 plus applications like Zoho Books, Zoho People, Recruit, Sign, Contract, CRM. There are many like these applications are there. You can integrate with based on your requirements internally without any scripts. It's a low code application, but if you are using internally max to max with drag and drop, you can integrate your application. Then the key important advantages in Zoho Creator. It's a low code application. You can customize your apps as I mentioned with using drag and drop, and also you can automate your process for approvals using blueprints or schedule. You can schedule that. There, these are all inbuilt functions. Just again, it's a drag and drop only. You can automate for notifications. You can create custom applications. You can automate for payments. You can create batch workflows and workflows for your easy transactions and easy updates. And the major important one, centralized data management. Using this automation, using Creator for your various business or various operations, you can create forms and modules within the Zoho Creator. It will be in central repository for your analysis purpose or tracking purpose, for your audit purpose. It will be in centralized module. Just giving you an example, nowadays we are using X application for people management, Y application for HR process, Z application for accounting purpose, for some Power BI for analytics. But here you will have entire data in your centralized management. If you use Zoho one, there will be integrated application, or else you can create your complete application for your entire businesses, for people management, HR management, or sales, purchase, whatever business process. It will be in centralized database. Then you can streamline your integrations, connecting with internal applications or third-party applications, and access from desktops, mobile apps, and your iPads. It will be in real-time syncing only. Then you can secure and it will be scalable. Here it will be accessed by role basis. That means you can easily control your modules and screens, forms, fields, everything. Ultimate the final thing, cost effective solution. Here you can reduce your IT dependency instead of creating. I'm not ignoring IT. I'm just saying in application point of view, it will be in central place. It will be in cloud. In the single application, you can have multiple applications. Suppose if you have internal or external or somewhere else in the server, there will be IT team is required. I'm not against IT team. Just here, if you use this one, you can completely avoid that dependency, and you can easily automate. Yeah. The second one, Zoho contracts. As sir mentioned, this is very, very important nowadays. Each and every company will have agreements, contracts, various documents. But nowadays, we are having in email chains or WhatsApp chains or locally somewhere based on that requirement. Salespeople will handle some other platform. Procurement team will use some other platforms or locally, or HR will use some other platform. Instead of that, Zoho has provided Zoho contracts. Again, it is Zoho product. It will be in your Zoho one, or if you can able to, you can sign up with individually also. It will be in one central place for all the departments. You can create workspaces and you can create users, and you can assign that workspace. There they can operate your complete agreements and contracts and documents. I'll show you practically. Yeah. Here the advantage of Zoho contracts and sign. Here I'm just mentioning sign. Maybe for each and every contract or service agreements, any documentation. If you integrate Zoho Sign, you can avoid manual papers. It will be integrated with Zoho Sign. Zoho Sign is authorized application like DocuSign. There are many other applications. Directly from Zoho contracts, it will transfer to Zoho Sign. Zoho Sign will send a notification email document to that respective persons. They can open in browser. They can sign on browser. That also I'll show you. That is what Zoho Sign also they integrated and they given. But if you want to use separately also, you can sign up Zoho Sign and you can use your documents using Zoho Sign for contracts and all other documents for signing. Yeah, here you can create, manage, and execute your contracts digitally and complete securely and legal binding e-signatures. That's what I mentioned. Then you can create workflows for approvals, or suppose if there is any agreement, if you want to create approval mechanism, you can create internally. One person can drop that, another person can review, or some other persons, maybe more than one, more than two also can review and approve. Once that is done, you can send for negotiations for customer also, or your vendor or third parties. They also can review, they can approve. There will be multiple processes based on your company requirement. You can set up that one, automatically it will flow. Then they can able to approve. Once that is complete review and updates and negotiations done, then you can send for signatures. Again, it will send for document for signatures. Ultimately, this is one central repository, as I mentioned. Whenever you want to access, you can access. Whenever you want to again renew, you can renew it, or you want to create amendments or any add-ons or changes, corrections in clauses. If you want to add, you can add in one place. Whenever you want to download for your entire company, you can download from contracts module. This is just one overview. Now I'm moving to live session, how we can use Zoho Creator for your business with one small module. Today I'm going to introduce one vendor onboarding form, how we can create, customize in Zoho Creator with simple drag and drop. The second thing, how we can integrate with Zoho Books. That means once you enter vendor complete details in your contract, so creator, then automatically it will move to Zoho Books and it will create as a vendor. That is the flow. Today I'm going to show you using flow system and creator and books. Yeah, because of the time limitation, I already signed up and keep it ready.
Yeah, better.
Yes, sir. Quickly, I'll show you the existing setup. Then I'll customize once again and show you how we can customize ourselves. This is Zoho Creator UI. You can able to see, right? There is a developer section, there is a manage section, deploy sections. Here we can create multiple solutions. Here we can create microservices. Here we can deploy based on sandbox and productions. And if you want to share with mobile compatibility views, you can share it with them. Otherwise, you can create vendor portal and customer portal, or your service person's portal also you can create, and you can enable that one. They can able to access their modules. Then it's a common in every application: user management, organization setup, and these are all things. Don't want to go in details. Immediately we'll jump into the vendor onboarding form. So this is the vendor onboarding form. This is one just I created with limited fields. I'm going to show you. Here I created just only vendor name, email ID, phone number, and GST number and address and their contact details with the limited information to transfer or integrate with books.
So till as Babu is creating this, I want you to look at where you can place this. You have to create a customer, you have to create a vendor, you have to maybe in your payroll, you have to add an employee. Now, when you do, you may make mistakes. Second, this much like form has to be entered. It will take time. But you give access to someone, they enter it, you press a button, submit, and the account gets created. Like that's the magic.
Yes. See, I just dropped at the information, the minimal information, vendor details and address details and contact details. Once I submit it, here we can able to see that one Venu and Co. There are some other records. Here, if you click the complete details, so we can able to see here, or if there is any related modules, we can relate that one. I'm not going to show that one. I'm sorry. Now we created here the with minimal information. Now we'll see whether it is created or not in Zoho books.
So from the form, so the moment you give a form link to someone, ask them please fill up. So vendor client onboarding, vendor onboarding. Now you can just send out this form, ask them to fill it. The exact ledger gets created.
Yes, as Sir mentioned, if there is any vendor onboarding or customer creation or employee onboarding, various based on business requirements, you can create form and you can integrate with a drag and drop. See, here is just is created in your Zoho books. You don't need to give your Zoho books access to the external persons or your internal persons also, non-finance departments. If you can just create one small form and you can able to share with this form with the team data entry people, as sir mentioned, they can able to fill that one automatically. That information, that mandatory information will come and set into here. There we can do more automations and validations. Here I'm just uh, sending minimal information and mandatory information. See, now it is simply once we input the data, automatically it's integrated. Now I'm going to show you how we can do this ourselves. Here in solutions, create solutions. Okay, I'll show you end of the session how we can use create using Zia. We can create module using prompt and integrated with the Jia. Now I'm just manually creating. Here we can create new form. Otherwise, here also plus button is there. You can create form. There are multiple options. From scratch, I'm taking, or you can import from database, or you can use again Zia. Zia means like ChatGPT. If you give prompt, it will create your form. It is like your Office forms, Google forms, or O forms. Just they already provide all the fields, the requirement maximum fields. You can use these fields and create your requirements like your invoicing formats or any based on your requirements. Quickly, I'm going to create the same thing using single name. I just created vendor name. Then I'm just adding email field for email. Just adding address for address field. There are multiple fields. By default, they are providing address 1, address 2, country, state, city fields. I'm just taking as these. Then another section, contact details.
So this is similar like a Google form.
Exactly.
You can just drag drop. You can add right side. You can see the conditions. If you are giving numbers, you can say initial value, minimum, max. If you are putting phone number, you can say it should only be having numbers, not special characters. Date. You can simply build now. Building is a little mundane job. It takes time, but it's the easiest thing. And it has no coding. It is just forms, drag, drop. You need to study what are all the features that exist. You can
Correct.
also have a feature to upload. Ask them to upload PAN, upload this, and you can define the file type, PDF, notebook, Excel. You can do all that.
Yes. Yes. So we simply just in a minute I created this vendor onboarding form again with drag and drop only. This first step we created vendor onboarding form. Second thing, now again we need to integrate and we need to transfer this after submission to Zoho Books. For that again have to go to Zoho Flow. There are multiple options to integrate with third-party applications and internal Zoho apps. One is using Zoho Flow, we can integrate. Another one, Zoho Deluge script. Number 3, there are some third-party applications. We can use that and we can integrate it. The best option for you if you are completely non-coding persons or non-technical persons, use Zoho Flow. Again, it's a drag and drop. I'll show you here how we can integrate Zoho Creator and Zoho Books for flowing information from Zoho Creator to Zoho Books to create vendor. Number 1, we created vendor form in Zoho Creator. Number 2, now I'm mapping in Zoho Flow. See, this is the Zoho Flow. Here we can create flow using this create flow. There are multiple options, but if you click on that, it will come directly to the flow options. This is also very much easy. You can use it for your external application integrations also. There are multiple options. Now I'm using app. See, here you can search. Suppose if you want to integrate with your Google Forms or some other apps or with Power Apps, you can search from here. You will get that apps. You can integrate with that one. Here I'm going to search Zoho Books. First, I want to fetch it from Zoho Creator. This is very important. The flow and hierarchies we have to follow. Application is responding little slow. Here there are multiple actions based on your record creation in Zoho Creator. You want to transfer or create and update or only update. Now I'm just taking create or update. Anything is happened in that form in Creator, it has to transfer. Next, the condition is created. Vendor onboarding form 2. Here automatically it has taken vendor form name. Click done. See, now it is taken Zoho creator app details. Now we'll take Zoho books. From left side it is showing. There are multiple actions. Now we need to take vendor create. See, create vendor. You need to just drag it. So it is taken automatically that Zoho books name and variable details. Now we need to map this record when it is created and updated that field into Zoho books form. This is the Zoho books vendor form. Here it is asking, these are all okay. First name, yeah, contact name is there. You just select here or you put in your cursor into these fields and click on this right side, that key value. It will take automatically that names. The mandatory things, if you give mandatory things also is fine. I'm just going to give only mandatory things now because of the time limitation. Then display name also it is expecting. Email address, phone number. We take again phone number into mobile also. If you capture these are all fields in your creator form, we can add that also, but here we have limited. If there is any mandatory fields, no, there is no mandatory fields. Okay, we complete this one. See, number one, I connected Zoho creator. Number two, I connected Zoho books and mapped with Zoho books vendor form from Zoho creator details. Okay, now we need to enable this flow. We'll test that one whether it will connect or not. Yeah, it's connected because we did direct integration. Now we'll go and create vendor. This is vendor onboarding form 2. See here. Here I'm just adding. I just filled this information. Now I'm submitting this form. We'll go and check. Here also I'll show you here also. It will come into history. Maybe it will take 30 to 40 seconds. Until now, any doubts, any clarifications, any questions? Here we are just showing how the application is working, how we can utilize for one activity, but you can create number of applications based on your requirement. You can create your gate entry module, visitor pass module, or asset registers, or hotel management, or service related applications, or manufacturing module, or fleet management, any module, or store module, or any uh, field services or work services related, anything you can create using creator, and if required you can integrate with third-party applications using flow or internal deluge scripts. Yeah, see, now it is came to here. The record has inputted This is the details from Zoho Creator. The second thing, Zoho Books has received the same information. Yes, this is technical thing. Anyhow, we'll jump into Zoho Books and I'll show you whether it is came or not. See Sivakumar S. Sivakumar L. Vendor detail has created in Zoho Books. Just we use simple drag and drop form and we just use Zoho Flow. There also is a drag and drop. Now we integrated. Now whenever you input, automatically the flow will trigger into the Zoho Books. Here you can add multiple things. If you want to send notification to WhatsApp, the vendor has onboarded, approved, or rejected, or with some other missing information, so you can send it to WhatsApp or notification, email notifications also. This is how Zoho Creator will work. Based on your requirement, again I'm telling you, you can create your custom applications. Quickly, I'll show you using that Jia how we can create modules. You don't need to track also. If you give minimal inputs to that Jia, that will create automatically that forms. And if you want to calculate some values, that the complete end-to-end activity, Jia will set up that one from backend. It's a one-time activity. The create solution. There are libraries also. You can pick it from library. Required. There are multiple modules. Sales management module. Directly you can install and use like vendor onboarding form. There are multiple IT asset register, support desk, expense trackers. There are many modules. Okay. Now I'm directly jumping into Jia. Here we'll try to create P2P. Just giving a small information, a small prompt, it will generate custom forms and module. If you want to add multiple things, multiple criteria, you can mention, suppose in purchase order I want payment terms and conditions, due date, or some other fields. If you mention that one, that will add automatically. See here tracking also automatically. This is data moduling. We'll create application. If you mention your field names and top part fields, bottom part fields, or body part fields, or item details or calculations in your prompt, exactly that will create that form.
So now with the technology being there, it is less of doing work, it is more of thinking work. How well you can imagine the prompt and give as an input, that is what it is going to do. So now it is building the entire procurement management application. It's like if you can see in the prompt, it has built a dashboard, purchase order, everything. So,
Yes, this is the beauty of the prompt and Jia integration with Zoho Creator. This is just depending on your prompt, it will create your entire application. You no need to drag and drop also for file upload with conditions. Within that, if there is any add new option is required, if you mention your prompt, that will add automatically.
And the beauty of Zoho, unlike if I have to say Bolt or Lovable or Replit, Zoho has its own suite. So there is a Zoho database is there. So it is an integrated application, books and everything. It is
Correct.
living in an environment. So it is better to explore Zoho Creator through Zia, which is going to do bigger applications.
Maximum, if you know your requirements exactly, if you give in prompt, it will create your setup. Beyond that, if you want anything need to be edited or more, if you want to add some additional fields, there is option edit application. It will jump into the edit application. For example, in purchase order, here it is displaying all the lists one below one, but there is no item details. It's not added. Okay, no need to go again back to Gia. You can add it from here. There is an option subform. See subform. In middle, I'm just adding. This is tabular form. Max to max, if you spend 10 to 15 minutes time, you can design your application for small businesses.
Yeah.
Access this application and we'll go and check purchase order with tabular details. Here I can add multiple columns and rows. Maybe if you want to add rate value and some other columns also, we can add it. Just to show this one, I'm just added it. Here, if you want to add listed fields, we can add listed field also. Quickly, I'll show you that only one thing, that list field we can add, how we can add. Then we'll jump into contract. That is most important one in our today's session. Like EOM. I'm creating one module for EOM. Only just added two fields. See, they given lookup fields. EOM is different form. Purchase order is also different form. From different forms, we can able to get values. I'll show you how this will help. See here, add new entry. I'll show you how this will help during our data entry. This is my purchase order. When I come to UOM here, if you see add new, this is the UOM is a different module, but here we can able to add new and we can add the details. Right, same thing if you go to this UOM master, here also you can able to see that one. It will post automatically to this module. This is how you can create Zoho creator. There are many things based on your requirement you can design. There is no limit in creator. You can create multiple forms, multiple automations and integrations. Yeah, thank you. Any doubts, any clarifications in Zoho creator before jumping into Zoho contract? No, right? Then we'll move immediately. As we discussed about Zoho contracts, it's a centralized repository. You can maintain your complete organization documents, signed documents in one place using contracts. Zoho contracts also is given many templates. You can use the term, for example, for service agreements, for NDA documents, for vendor agreements. There are many different kind of agreements they provided. You can use that one. Otherwise, if you have your own document, you can upload and generate templates and you can use for further. Is my voice is audible? Can you confirm anyone via chat?
Yeah, audible, sir.
Yeah, thank you.
Prabhu, I got signed out in between. You asked a question?
Sorry, sir. Yeah, we'll finish in 5 minutes. I'll quickly show you how we can generate contract and how we can integrate it with the sign. Max to max 5 minutes, sir. I'll finish the
No problem. No hurry. We're just at 5:28.
browser. I'm just trying to log in from different browser. Yes. Here's the landing page of Zoho contracts. Here we can monitor how many documents are in draft, approved, negotiated, and signed and active. If required any additional stages, we can add the stages also. Yeah, quickly we'll jump into contract. This is the main module to generate your contracts. There are two options. You can import and create your contract, or you can use inbuilt templates and generate your contracts. Now I'm just going to, okay, anyhow, will show you the inbuilt contracts templates. So here they given for products, manufacturing and creative media and licensing. There are multiple service as a service agreement, subscription agreement. There are multiple templates for HRM they provided, for business they provided. There are master service agreements. Okay, we'll take NDA document from that inbuilt only. This is the minimal information we have to provide. Counterparty name Shiva Kumar. Okay. I'm just taking that existing one. Otherwise, if you want to create, add new, you can create your counterparty and contract team indefinite. Select on execution and save and continue. There are a lot of features in contract also based on your requirement, based on your process and your requirements. You can operate Zoho contracts. I'm just showing one simple module and simple document how we can automate and how we can repository in contracts using sign. There are multiple features here. Only from here you can construct your own contract with headers and footers and clauses. It will come very beautifully if you can drop from here also. It is loading, it's taking time. Yeah, it's loaded. Is an inbuilt one. Zoho has given this content. If required, you can use this content, or otherwise you can erase and you can add your own content, or you can use import module and import your Word document. Then you can correct from here. So this is how we can load and correct using there are clauses. You can use these clauses and correct it. If you want to insert, you can insert the fields and images, whatever you want. There is a feature. Then we'll try to use import one quickly. My organization draft. Now it will ask to upload your own document. Here I already have document. I'll show you. This is very simple document. I used ChatGPT and created this document. It's a sample document for presentation. There is a 2-page document. See, it's uploaded. See, there is 2 inputs. Document is expecting. Okay, we'll try to add the 2 inputs here. Year, day. Okay. Email field. Just this is one example. Same way you can use for your requirement. You can add multiple dynamic of fields and you can add the values. Here I'm just adding day. Day is 25th. I'm hard coding that. Year month. Hard coding. Year October. Just two only I'm going to give this for dynamic. There are signature fields. We'll leave now. Dropped complete. Once you drop complete, it will ask send for negotiation for your counterparty. If you press this one, it will send a mail to your counterparty. They can review. If there is any corrections, they can correct and they can submit. Again, that will ask for you to accept or reject. Once you accept, the changes will update into your document. Otherwise, it will reject. Time being, I'm just skipping this negotiation. The second option, once negotiation is completed, there is a negotiation and also approval also. Before negotiation, we can enable approval mechanism, approval module. It will we can add multiple approval hierarchies, more than one. Automatically, once you draft, completed or submitted, then it will send for your internal management approval. Based on sequence, they can approve. Once that is approval done, then it will send for negotiation with your counterparty. Then that process is completed. Finally, it will ask for signature. Now I'm just sending for signature. Add signatures. In signatures also we can add multiple persons. Here I'm just adding from organization end one mail ID admin @nbkbss.in. From counterparty, I'm just adding this Gmail account. So as a customer, there we can add receivers or in-person signature. There are multiple features. Now I'm just adding only organization person and counterparty person for signature. I just send email. Now it is asking to map the fields for signatures. See, for organization person, admin @nbkbss.in. Here organization is Mandal Accounting Service Private Limited. I need signature from that. Here is the this will redirect with Zoho sign. Zoho Contact has inbuilt feature with Zoho sign. If you want to have separate Zoho sign, you can sign up with Zoho sign also. See, the second thing, you'll have to click on the Srinivas, that counterparty. Then you need to drag signature and signature date fields. Whenever you are signing, that time this field is it will ask for to enter the details as a mandatory. Then full name. Okay, these are all the fields that respective person has to fill. Okay, then I'm sending for signatures. Going to view your signing orders. We can see is first Srinivas, second admin person. Okay, now we'll check in admin person. See, there is one unread email. This is the admin email ID, admin@nbkbss.in. Here it is asking this template also we can customize based on your requirement, the subject and body of the matter. So below is the button start signing. I click start signing, it will redirect to sign page. The counterpart is not required Zoho sign account. It will redirect automatically with the signing. Agree and continue. See, now it is asking signature. You can type your name, Babu, and stamp it and finish. Here owner side, organization side signing is completed. Now we'll jump into here we received. This is counterparty email ID in BKBSSZC. Here we received the same mail. Starting sign. Receive document. Agree and continue. There are multiple options. We can use this one, skip signing, decline. There are multiple options given by Zoho. Your name, if you want to add something as Srinivas, client end, okay. Designation, manager, signature. Once you click on, you can draw your signature, or you can upload your signature, or you can type and add your signature. See, then finish it. It's completed. It will send acknowledgement also after signing. Maybe now signing is completed, right? We can able to see the signing document also. Max to max, it will take 30 seconds to 60 seconds. Okay, anyhow, we'll jump into our contract. See, admin has received that signed document signed. That means owner, company organization has received. See, this is Zoho signed document ID. This for demo purpose because it's a trial account. See here they can able to see all the signatures. They can take printouts if required. Otherwise, they can use this for document purpose. Then we'll go to Zoho contracts. For signing also, you can add some receivers email address. They also receive after signing, like a finance team or sales team or legal team.
So the advantage here is you can have multiple signers. You can send it for them to edit. They can edit. You can see the version control. And once it is signed, like this document resides with you and a copy with them.
Right. This is one central repository. Whenever you want, after 5 years also, you can log in and download the document, signed document. See Babu NDA. You go to Babu NDA. I'll show you that signed documents from here also. Agreement history. There are multiple features you can duplicate and use for next time, or if you want to amend it, you can amend it. See here, NDA signed document is here, and also there is a certificate given by Zoho. Along with this document, you can send the certificate also. There are many clauses relating to that. So if you want to attach any related attachments, you can attach. There are many features. If you want to collaborate with any other team members, you can share this document with that other team members. Like you can share with your team members also. They can able to see. Yeah. This is how Zoho contract will work. There are many features based on your requirement. You can enable and use Zoho contract. This is how end-to-end Zoho contract will work. Any doubts, any clarifications, you can ask. Same thing you can use for your HRM module. You can integrate with your HRM module for your offboarding, onboarding, or employees contracts, all the documents. NDAs you can use for HRM, or you can use for sales, you can use for finance, or you can use for compliance and other management related documents. Just only one thing, based on your company requirements, you will have to create one-time templates for your future reference. You can use that multiple times and you can generate that one dynamically. Yes. Hope this is useful for all. Yeah. Now we are closing the day, and part of tech session.
Yeah, great, Babu. And
Thank you, sir.
tech sessions are kind of less appreciated, and people get checked out saying that, okay, look, I'm not a programmer. Can someone in my programming team do this? Or how do I do it? I don't understand. This is what common happens. As a users of the finance, I would say that you should appreciate that there are things which can be automated. And the advantage of automation, it saves your time, brings accuracy, brings efficiency. The objective of session today is not that you should become a techie, but you should know that things like this exist, and you might not be doing it. You can always reach to us, reach to me, and so can this be done? Babu is there. We have a team who will be there, who will be building the application for you, right? The objective is see how you can automate whatever you are doing. Yeah, more sessions to follow. And thanks to Ashika for putting up the GST session, and thank you, Babu, for bringing up some solution, real time, creating the forms and showing how it can be created in the books. Very nice of you. And users, we will catch up. In the next session, we are not going to have a tech session. We will see if we can introduce a small portion, because GSTR 9 has come. December 31st is the due date. We are going to have our next session a little early. We would be having in the first week of November itself. That means maybe we will be having our session on maybe 7th or 8th November. Yeah. So Stephen will be sharing all the details, but let's actually dwell deeper into how they handle annual returns. Yeah. Thank you, Babu, for the detailed presentation.
Thank you,
Thank you,
sir.
everyone, and see you in the next session. Good day and bye-bye.